if you want to, if you've seen my Cambridge University trading strategy presentation where I talk about selling premium or selling options on stocks, you might be wanting to have a dabble, have a play around. And there's a really handy tool I'm just going to show you now where you can mess around with strategies without kind of putting money on the line. Similar to Option Alpha, where you can code up your strategy, but this is an instantaneous backtester. So let's jump in and have a quick look. All right, so if you open up an account with Tastytrade, I use them for option trading. It's a US broker. You do have to send your money to the US to fund the brokerage account. And then from there, you can trade US stocks, options, futures, commodities, and so on. So in their platform, this is the platform. There's a bunch of tabs. So your positions are in the top, then you can place a trade. That's your trading activity. And then from here, you've got research, watch list, Tasty Live, charts, Tasty charts, history, follow, and then backtesting. So that's where we've gone to, backtesting. Now from within here, you can pick from all these tickers. So they've got Amazon, AMD, ARM, Broadcom, Boeing, you name it. So I've gone with Microsoft. They've then given you some intervals in which to test your strategy over. So you've got 12 months, 2 years, 3 years, 5 years, and then they've got various inflation-induced bear market, vol spike, tech sector mania. So lots of different market conditions. It's really clever, where you can test your strategy over. And then custom, obviously. Not obviously, they also have custom. So I've just gone with 3 years. I've gone with Microsoft, not for any particular reason. And then here you can select your option strategy. So you've got your single legs, long call, long put, short call, short put. Best way to learn about these, if this is all new, is Grok. Get it to teach you what it means when you buy and sell options. And then you've got your spread trades. So let's say on Microsoft, we are generally bullish. So what happens if we sell a credit put spread? And they've suggested a 30-15, so that's a 30 delta, 15 delta. Now all that means is that you've got an imaginary 30 shares against an imaginary 15 shares. So you'll generally be long 15 delta, so 15 shares. And one contract is 100 shares. So it's the way the options work. And then it's 45 days to expiration. You can add other legs, you can do whatever combination you want. And then here, your entry conditions, an exact days to expiration on a specific day of the week or every day. So I've gone with every day, and then I've limited the number of active trades to 1. So basically, it'll just get me in a trade, and then the exit conditions will play out. And then, yeah, so when I have 1 trade on, don't enter a new trade. I don't want to use the VIX. So if you use the VIX, you can set minimum and maximum number for the VIX for this trade to play out, but I don't want that. Exit conditions, exit at specific days to expiration, we're going with 21, and then a take profit of 50. I'm actually going to change that to 25. And then you can run the backtest. So a fairly standard put spread, and those are the results. So maximum active trades 1, doesn't enter a new trade, 21 days of expiration, takes profit 25%. How did we do? So the strategy made a profit of $536, which is a 14% return on the used capital. Average profit and loss per trade was $5. If you had just bought and hold, you would have made $1,000. Return on used capital, 29%. So in this circumstance, you haven't created a great strategy because the buy and hold did better. So then what you can do is you can go back and you can amend your numbers. So I don't know, let's try 50. So that's an at the money and a 25, buying a 25 put as your spread. Run the back test, leave the profit take. So my point of just demonstrating this is that you can now mess around with strategies and see which one floats your boat or which one works on the stock that you are interested in. So here we go. Here's the next one. it made a loss of 167, drawdown is 76%, and return on used capital minus 4%, blah, blah, blah. If you'd held the stock, you would have made 1,000. And then from here, you can look at the details. So these are your green is obviously your profitable trades, and the red are your losses. And then you've got loads of details here, your profit ratio. Well, you can see lots of different bits of information to look at. They don't show an equity curve. That's just your logs. That's your trade log. So you can download the trade log to see everything that happened. So let's go back to summary. So now let's just try a naked put. Okay, so just selling a naked put, you've made $4,000, and if you'd only bought and held, you'd have only made 2,000. So that's done a better profit, but you're in a 66% drawdown versus 31%. Return on capital is 45% and $42 per trade made. So again, all interesting stuff. There's your profits and losses, and you can keep playing around with all these settings to see what works for you. But it's a really cool little platform. Recommend getting used to it. Recommend trying these various strategies on various underlyings and seeing your sort of best performing strategy. It's a really handy tool, costs nothing. You just have to open up an account and fund it. I don't even know if you have to fund it. But if you're trading, the Tastytrade platform for options is super good. So there you go. That's another really handy resource. If you need more information on what all these particular strategies are or how options work, let me know. I can do videos on like each one. There's so many videos describing what a long call is and what a long put is. I don't feel like there's a demand for another video of what these things are. But this is super cool backtester that I use, and that's kind of why I'm highlighting it after that Cambridge University presentation, showing you how to sell premium for a profit. All right, that's it.